Good morning, everyone. Thank you so much for joining us this lovely Wednesday morning. At least it's still morning where I am in Vancouver. Very happy to be here today to be hosting a webinar with Heliostar Metals. Heliostar is a stock that I'm pretty excited about this year. It officially made it into my top 3 list at the beginning of the year. It's one of those lists that newsletter writers like myself are always forced to make. And fair enough, I put myself in that position, but Heliostar made it there. And I would say it's because the company is pursuing 4 different targets at its project, each of which on its own, I think, could make an enticing prospect, make a stock an enticing prospect. So, you know, I like 4. I think 4 is better odds than 1, and each one of those targets is pretty compelling in my opinion. The timing is really good to host Heliostar today. They put out results just yesterday from the second of those targets in terms of the order in which they're releasing results. So I'm excited to have Charles Funk walk you through those results and what he thinks they mean. But first, of course, I will steal the stage because, you know, that's what I do. And talk a little bit about what I see happening in the markets and what I'm doing about it in terms of sort of moves and timing and all of those sorts of things. So you can see my talk is called It's All Coming Together. I don't think that's a groundbreaking title. It does seem that way. I have under there, but timing and picks still matter because they always do. So I'm going to run through this fairly quickly. These are some big macroeconomic topics. I don't want to linger on any of them because each could be a long talk in and of itself. So pardon me if I rush through some of these larger concepts in the interest of getting to some details about timing and picks and then letting Charles talk about Heliostar. The basics here is what do metals need to perform? If I say it's all coming together for a metals bull market, what does that mean? Well, it means that I think that the 4 premises of a metals bull market are all met right now. And what are those? Well, we need strong demand, ideally against weak supply. We need, it's better if we do not have a strong US dollar. You can also say that as it gets help from a weak US dollar. For gold, we need negative real interest rates, and then we need investors to feel compelled to look at the commodity space. And I have that phrased here as investors have to feel the need to diversify or seek yield. They have some reason to move towards commodities. These are just some, the pictures here are just, I searched copper in sort of a news feed, and those were the first titles that or news stories that came up there. And I searched gold price, and those were the news that came up there, just as a capture of the way that metals are capturing interest in the markets these days. Okay, so let me run through each of those concepts a little bit. Certainly, the first was, you know, you need strong demand, ideally against weak supply for metals. I think that the price charts that I have up here for copper, for iron ore, and for nickel are a good suggestion that that scenario is being well met. And of course it is. We have oodles of stimulus, we have specific infrastructure programs, we have investors, a market that's broadly looking towards a global economic recovery after this pandemic. And so we have strong demand for metals, the metals that feed those sorts of infrastructure and recovery programs. There will be bumps on the road. We don't see them at this exact moment, but there will be bumps on the road to reality. But right now, all those massive stimulus programs really are supporting metals demand. If you add in sort of the green tech and green energy specific focus from many governments, including America, I think that bodes especially well for copper, silver, nickel, things like that. And then on the supply side, it's not strong. It would take a talk in itself to go through the supply side mechanics for copper, for iron ore, for nickel, but it's not strong. And that's not a surprise to anybody who follows the metals and mining space. So the first point is met. Next, the US dollar. I certainly think that there are reasons to believe that the US dollar bull run that we have been in for a decade is ending. Broadly speaking, the reasons there are inflation. Now, inflation is a complicated one. We're not seeing a lot of it right now. We're not seeing it right now. The fact that we're not seeing it right now, which could also be said as we don't know when it will really manifest, is why nominal yields, so like what the 10-year treasury yields, those yields are having more effect on the gold price right now than real yields, which are the ones that account for inflation. again, that's a bit of a complicated thing. At the end of the day, inflation will show up, and it is, of course, going to erode the US dollar, and it's one of the reasons why the dollar is already arguably turning its way back down again. Then there's immense debt loads, and China, you know, in a very long game to reduce its reliance on the US dollar as the world's reserve currency. I think we are in a gradual shift, which just means that I don't think a strong US dollar is going to act as a headwind in this metals market. For gold, what you need for a bull market are negative real interest rates. They are the most important bull force for gold, bar none. The chart on the bottom really supports that statement. It has the price of gold on an inverted axis, and it has the real yield on the US 10-year, and that's what I call correlation. They truly move together, and when real rates go negative, gold goes higher. And we absolutely had real rates. They were declining going into 2020, and then of course the pandemic slammed interest rates to zero. A little bit of inflation means that real rates were immediately negative, and then they got pulled farther in that direction as the year went on, and we are very much in that setup now. And unless you can imagine a central bank anywhere increasing interest rates anytime soon, we are going to be here for a while, and will only be here more so as inflation starts to show up. Then we get to that final point, which is, are investors compelled to look to commodities right now? Well, I think there's a few reasons to believe that they are. One of them is the need to diversify. So a huge amount of the money that's invested in stocks, bonds, everything is low risk capital. And that low risk capital for many years used to own bonds for yield. That game doesn't exist anymore. Bonds don't yield. You have to pay to own bonds. So instead, those pools of low risk capital play stocks, because stocks just keep going up, and they own bonds for price, which has actually also worked well, for instance, in 2020. But there's real risk in both of those games. So the stock market is strong. How long is that going to last? I think a while longer, but the risks are very real. And as volatility increases, that will only become more apparent. Bitcoin is perhaps the latest example. A month ago, it was GameStop. These are examples of the volatility, of increasing volatility and risk in the market. Similarly, debt issuances remain popular, but the risks are there. I mean, there's a wall of debt that's coming at us over the next few years. It could well go well. It could also stumble. It all depends how much this economic recovery really happens. At the end of the day, there are risks. And if you are a low risk fund manager, what is one of your answers when you're trying to mitigate the risks in the games that you have to play, which are stocks and bonds for price? Well, miners are one of the answers for sure. And it's because miners right now stand out across equities for their balance sheet strength, for their free cash flows, and for their dividend yields. And all of those are exactly what a fund manager is going to look for when they're trying to mitigate the risks that I just outlined. So, for example, if we just look at gold miners, mid-tier and major gold miners, this was a month ago, Scotiabank said that their dividend yield average in their universe was 2%. It's probably higher than that now, because several have boosted their dividends since this chart was made. 2% is well above an S&P 500 average of 1.6. And the important thing is, like I say, several yields have increased in the last few weeks. And that's because a bunch of major miners have set up structures whereby they peg their dividend to their cash flow, and they're making lots of money. They're in net cash positions, and they're printing money at current gold prices. So the fact this strong dividend yields on their own pull safe money towards the sector. Then you add in the fact that we are in an environment that encourages people to look at commodities. We're in an inflationary growth environment that is naturally a commodities bull market environment. You put those things together, and I do really think that the low risk capital that truly is the fuel for a metals bull market is going to start turning this way, even as the rest of the stock market continues to rise. Okay, all of that said, so I think that the premise for a metals market is met. All of the factors that we need are in play. That said, that's the big picture. Does that mean that you should buy today or next week or next month, or what should you do right now? Well, short-term predictions are the hardest, but they're certainly very important when you're considering entering a space or a stock. Obviously, it's better to do it on a dip than a peak. Generally, when you're playing the speculative game of investing in explorers, it's really important to sell some into strength and buy during weakness. That is just a key part of high risk investing. So what does that short term look like on the gold front? Well, as it turns out, precious metals are usually strong through February, and then they don't do well in March, and then they're sort of boring in April, May, June, and July. We may have had the March weakness kick off a little early this year. February hasn't been a super fun month. It's been okay, but it hasn't been, it hasn't been a 1.3% gain. That's the average monthly return that you can see on this chart here. I actually think that we're likely looking at a bit of a boring few months for gold from here. And I think the key reason here is what I referenced a little bit ago, which is that there's a lot of debate now about when inflation will really show up. It's coming, but exactly when is it going to come? And because it's hard to know that, the market is paying more attention to nominal yields. So what does, the 10-year Treasury yield? Not accounting for inflation. So nominal yields do not account for inflation, and those are rising. The 10-year is at 1.3 right now, which is well up from the 0.5 that it was 8 months ago. And a rising nominal yield suggests that it is a counterforce for gold. At the end of the day, what actually matters are real yields. So those nominal yields corrected for inflation. As soon as we get a little bit more clarity on how and when inflation is really going to show up, I am confident that the market will once again shift its focus away from nominal yields and back to real yields. And the real yields will tell a gold bull story. But I think it's just going to take a little bit of time for that to come back, especially since we're in what is a seasonal lull in the gold market. So my multicolored table here, the things that are in green are the things that I think are most likely to happen, and the red are the least likely to happen, still possible, but less likely, and the yellow are in between. You can see that I think for gold and silver, we're likely going to follow the regular pattern, which is that they're going to be boring, maybe slide over the next few months, and then set themselves up for a very strong fall. It's important to note that base metals, industrial precious metals, which is, platinum, palladium, all of them but gold, and green metals, I think, are going to ignore whatever seasonal pattern happens in gold and are just going to keep on kicking it, because that is inherent in the recovery story that we're in. So if that's my perspective, I really do think I have been selling a little bit in the last little while, not a lot, but just enough, to cover my tax bill, to make my RRSP contributions, and to not stress if this slide that I've been talking about does happen in the next few months. It's also important, I think, to have capital on hand to deploy into seasonal exploration opportunities, and to deploy, if things are boring for the next few months, into the stocks that crop up that you really like, and to ensure that you have enough positioning in base metals. You always have to sort of keep a lot of balls in the air and balance them. I want to wrap up this short-term, long-term outlook by just reminding us all that discoveries don't care what the patterns are. Developers and miners, they follow patterns. Developer stocks, mining stocks, they follow the patterns. But discoveries happen when they happen, and they send stocks soaring no matter what's going on, right? So on the true explorer side, it's important to buy stocks based on their schedule, on the schedule of what's happening with that stock. And in that, always remember that there's a lot of forces that push junior share prices around. It's not just what numbers come out of the drill bit, but it's also financings and free trade dates and when they can explore in their projects. Maybe there's a permitting overhang. Be aware of the forces that are pushing that story, and time your entry and exit based on that story. That's important for explorers for sure. And for summer explorers, those that work in northern climes and can only operate in the summer, don't wait until the drills are already turning, because there's always this anticipation, this excitement about what might come from these northern projects. So you probably want to position ahead, because there's a pretty reliable share price gain leading up to results. You don't have to, it doesn't just happen when the results come out themselves. And when you're contemplating exploration stocks in general, I think you need to always demand multiple targets, because that just means more chances for success. Exploration odds are never good, but the more kicks at the can you have, the better your odds are of kicking a goal. You need a company that has a really clear plan for how to advance those targets and how to create value upon success. And you need a team that has technical expertise. And that's not just they have geologists, but they have geologists with pertinent experience at all levels with those rocks, with that jurisdiction. And you need good capital markets expertise. It's a lot to ask, but that's what investing is. You need to ask a lot of the companies that you are putting your money in. So that's what I'm going to talk about. That's all I have to say today. I do certainly now want to ask, of course, I ended with a slide largely, I was going to say partly, but the honest truth is largely because it's a good segue into letting Charles tell the story on Heliostar. I really do think that Heliostar has multiple targets with good chances for success, and I think the results that came out yesterday support that statement nicely. They have a very clear plan for how to advance those targets and demonstrate the potential therein to the market. And there's lots of technical expertise and capital markets expertise in that group. So I think Charles is going to take us through the basic story on Heliostar. I will remind you before I let him start talking that I would love, and Charles would love, if anybody has questions, please enter them into the question box, and I will make sure that I pass those questions along to him in the Q&A after his presentation. So with that, I will stop talking, and Charles, go for it.
Perfect, thank you, Gwen. I think there's another point of what you talked about that's going to impact companies like Heliostar. The cash flow that these gold companies are making at the moment is initially going to go into dividends and building investor sentiment. But then the next questions, and I've seen it, I used to work for Newcrest and I remember these pressures in the last cycle. You are mining your resource base, it's disappearing, it's a unique industry. And so there's going to be a lot of pressure coming on how they replace those. And I wonder if this pullback that we see in gold might actually bring valuations back to a point that the big boys start to move and might provide a bit of support in this lull period. And so our challenge then as Heliostar is to move our portfolios forward so that we're in that conversation. I think we realistically could be in that conversation in mid to late this year.
Absolutely. I think that's a great point, actually. Thanks for adding that in. I mean, I think I have shied away a little bit from talking about M&A because I feel like it's one of those things that we keep saying, oh, it's coming, and it has been building, it has been happening. But what you're saying is even broader than that. It's not just, Newcrest coming in and taking out Heliostar. It's a company like Newcrest taking a stake in Heliostar, getting their foot in the door, and there's lots of different ways that those majors can take the piles of cash that they have and use them to support the junior market for their own benefit, but then, as it turns out, for the benefit of all of us who are invested.
Absolutely, and it's the valuations. I always remember being nervous when you're at the peak gold prices or whatever commodity price, and so then it pulls back to $1,700, $1,800, and all of a sudden you're much more happy taking that leap.
Yeah.
So we'll run through Heliostar at a high level, and then we can sort of go into some of our more recent news release, and more importantly, our catalysts as we go forward. For people who aren't particularly familiar with Heliostar, we're a new company that formed last year. We think that we're very technically driven with an understanding that you need to do deals that are asymmetric, that are cheaper to acquire, and put together portfolios that have significant upside. And that's a core thesis that we have. We want to find high-grade projects where we think there's a lot of potential. And that's going to be a focus that you'll see as I run you through our opportunities that we have in Alaska and in Mexico. And so I think from an investor's perspective, the key things that we have is a management team with a very strong track record, both commercially and in discovery. The assets, I'll attempt to convince you, are very rare in this business and have a lot of upside potential. We also have a very tight share structure and a good financial position. So our bases are covered from an investor's perspective to highlight our assets. This website, this presentation will be up on our website, so you'll be able to find it for a deeper dive. I think we have a very strong board for our company, our side. With Jack Vinecourt and George Island, we have financial expertise. With myself, Alan Wilson and Ken Booth, a lot of deep technical knowledge in porphyries and epithermals in particular. And then with William Lamb as an operator, we would like to take Unga through resource into permitting and into production. And I think with that mixture of financial, technical and operating experience, we have a board that's done it before and knows how to navigate the months and years ahead. The next challenge we had when we built Heliostar was we needed to build a management team, and we did that throughout the back half of last year. Sam Anderson joined as our VPX from Newmont. We added a very experienced CFO, corporate manager, exploration manager, investor relations manager. And so now we have a team that in their respective areas has all done this before, and we're moving ahead with our portfolio. So first and foremost, I think Gwen has talked about before, you back a team. And so having a whole team who knows this space, I think gives us an incredible advantage in executing on the goals that we have. We appear to have our first malfunction. We've lost some of our, there we go. I'm not sure how that happened. Just a brief look at our structure, we have that tight share structure with only 31.6 million shares on issue. 2.5 million options outstanding, so very small, fully diluted shares on issue. No warrants apart from broker warrants, and very strong ownership by insiders and high net worths, including Eric Sprott. So a very tight structure that will provide significant torque as we bring out these results that we're going to talk about, and should give significant leverage to the upside on discovery success. And so all that's kind of saying that we spent a few months getting our house in order so that we could highlight our projects. And so that was a lot of the work that particular followers of Gwen would have seen in the early stages and came with initial opportunities for a re-rating. And so that was sort of the focus for the back end of 2020. As we talk forward in our plans for this year, it starts with Unga, which is very clearly our flagship asset. The project we think has a clear pathway to 1 million high-grade ounces as a first step, and then we plan to grow it beyond that. I'll run you through the reasons for that confidence when we talk about the targets themselves. But I think it's worth pointing out the location of our project. We're halfway down the peninsula in Alaska, which makes us remote, but it's surprisingly accessible. You can get daily charter or commercial flights from Anchorage, regular barge flights to the project. And it comes with a big advantage. When people think of Alaska, they think cold, frozen, short field seasons. It fed into that summer play that Gwen talked about that a lot of northern stocks have to battle with. We actually have an incredible advantage. We have a 9-month field season. We finished drilling in the last week of November last year, and we'll be back up at site in late March this year, so a little over a month away. And so it's not Alaska as you think and know, which is an incredible opportunity for us in terms of our exploration window. In addition, in Alaska, you want to be associated with the native corps from a relationship perspective, a permitting perspective. Those support goes a long way to speeding up the time frame of going from discovery to resource to process. And so we have a long-term agreement with the Aleut Corp that has a built-in mine lease. We're fortunate to have strong relationships with the Village Corps for the surface access right. We just extended the Unga agreement for 3 years. And then Sandpoint is a fishing village, and there is a desire for a bit of economic diversity. These towns definitely live or die by their primary resources. But another thing that most people mightn't know is Apollo was actually Alaska's first underground gold mine. And we'll talk about that as a target, but there is a history and a pedigree of mining here as well. And so it changes a lot of people's perceptions about projects in Alaska more broadly, or being down in the Aleutians. And so the project, I often say, it's probably I've repeated this joke too many times, or at least this truism, that geologically this project is amazing. I could bore you to death for hours and hours and hours on the technical side of it. And the reason for that is we have a huge district on Unga Island and on Popof Island, over 10 by 13 Ks on Unga, over 5 by 5 Ks on Popof, that has the full goodie box of geological potential. It's got porphyry targets, it's got bulk tonnage gold targets, it's got high grade vein targets. There is so many things that are of interest on this property. And so maybe that's something, one of the reasons it didn't get enough attention before, is there might have been a sort of forest for the trees scenario. And so we have a very clear strategy to unlock the potential. We think we can get to 1 million high grade ounces based on 4 targets. And they are the 4 targets that you can see in the green boxes here. We'll talk a little more about each of those. But we think if we can demonstrate that with some very high probability exploration, then we can work up these other targets in the background and ultimately show the full endowment of the project. But the reason we have the confidence to say that goal 1 is 1 million high grade ounces is the fact that we start with SH-1, 384,000 ounces of 13 grams. So a great start that's wide open. We announced yesterday a discovery that's expanded Aquila. We've got 2 veins, one 3.6 at 4.5 grams, another 5.7 at 5.6 grams in the first hole into Aquila. We've got the old mine at Apollo, and then we've got a non-compliant resource at Centennial. So our drill targets represent a high-grade resource that's open at depth, a stalled discovery that we rebooted and announced yesterday, an old mine where they told you the grade and where it was, and no one had drilled until we came back, and a non-compliant resource. It's a pretty rare set of opportunities. Gwen, do you think we should have talk through these, or would you like me to continue on in a presentation style?
Sure. I mean, I think, yeah, let's talk about what you were doing at SH-1. And in fact, I think this is a pretty interesting setup that you had here, because it looks from your drilling like you were focusing on the near surface with only 2 holes at depth. And so I think that could tell one story as an initial if you just look at the drill plan, but the details of why you did that are perhaps a little bit different. So why don't you talk about that?
Yeah, so SH-1 is that core 380,000 ounce resource. You know, it's from surface. It's 5 to 10 meters wide, true width on average, and spectacular grade. It's an amazing start. And when you look at this long section, it tells a story in that the core area has been well drilled. You can see it's got holes in it like 17 meters at 24 grams. It's everything you want it to be. And when we looked outside of that, we recognized that there was no drilling in the top 100 meters. There was only very wide space drilling outside of that area, and it's wide open to depth. And so we think we can expand SH-1 into the 0.5 to 1 million ounce range this year. And that came from 3 approaches. The first is in our drill program last year, we completed 7 shallow holes. We've now reported 6 of those holes. And you can see, pretty spectacular results. 11 meters at 7.7 grams, 2 meters at 18 grams, 6 meters at nearly 7 meters at 6 grams. Really good mineralization in the shallow level. But it is worth pointing out that there are misses in these. It's the nature of coarse grain gold systems and epithermals that not every vein, not every drill intercept is mineralized. And so that's added to our understanding. It's probably steepened up the plunge from what we previously interpreted. And so the next step is to drill deeper. And we tried to get 6 or 7 deep holes last year. We just ran out of time. And so it's an interesting theory when you think about how people explore. If you drill for gold results, every time you get a good result, you come back in and drill very close to it. and you end up with, either very potty or very tight, lot of detail in that area, and you can see that in this long section. Whereas when they stepped out and got lower grade results, they've never come back within 100 to 300 meters of those results. And
except you can drill like a few meters away from a high grade hit and get nothing, or can drill a few meters away from a nothing hit and get high grade. So that's the irony, right? Like if you don't hit, that doesn't mean you should stop drilling there, right?
You've got to use your understanding of the system, and that's, I think this cross section shows it really well. If we look in the middle here, there's a hole that's drilled 16 meters at 28 grams, spectacular intersection. There's another hole, forget the angle for a second because it comes from the footwall, but it drilled 30 meters of 2 grams. And that's telling you the inherent variability that you get in gold systems, especially ones that have a coarser grain nature to their gold. And so as long as you're seeing a robust vein, it's about the density of drilling. And so we think by doing infill drilling in these areas where it's very broadly spaced, we know in every one of these deep holes that we've got a 5 to 10 meter wide vein. It looks like the right stuff. We might have just been unlucky enough that we didn't put the coarse grain gold in the half of the core that went to the lab. And so sometimes you drill BM1 that's 5.5 meters at 24 grams, the deepest hole. Other times you hit these lower intercepts. Mm-hmm. And so the solution there is systematic drilling. And so we are going to systematically infill and step down at SH-1 when we remobilize in about a month. And we think we can expand the resource quite significantly because it's rare to see those kind of intersections wide open.
For sure. And interesting with the decision to start with, you had your 3 opportunities: go down, infill the sparse areas, and go up. And that going up one, it was sort of a low-hanging fruit since you had a short field season last year by the time you did all the corporate wrangling that needed to happen. So short holes were simply easier, and there was this sort of obvious gap, and it sat, partly right on top of a high-grade chute. So it seemed like a sensible place to start last year.
Absolutely. You always do your easiest, highest impact drilling. Logistically easier impact from an impact perspective, had the biggest impact. Shallow resources are particularly valuable, and proved our thesis that there's a steeper interpretation here than had previously been recognized.
Right. Okay, that's SH1. We got to get through 3 more targets.
Exactly. If you just had that would be fantastic. But what separates Unga as an opportunity is we'll stack these targets one after another, and that goes to the statistics that you talked about. You only need to be lucky on one of these to transform the value. And so we've moved to Aquila. If you look at the inset, we're on the same vein, 6 kilometres to the southwest. There's targets in between. But we came here because there's outcropping gold you see between 6 and 30 grams spread over 850 meters, a huge footprint. Battle Mountain found this in the 80s, trenched it and got some good results. But when they went to drill it, they got really poor core recovery. And amazingly, from that day till this, there's a reason it got lost in an oil and gas company and then in another company that was focused in Ontario. And so all of a sudden you can lose decades in that story. And so we are the only company that's ever followed up that drilling. And we announced yesterday in our first hole that we've hit 2 veins. It's probably a little better shown on this cross section through here. We hit first of all the Ankle Creek vein and drilled 3.6 meters at 4.4. So, not a home run, but a pretty good start. And then that hole continued on, and admittedly, we didn't fully understand this at the time. You learn, that's why you drill, to learn this. We then hit the Amethyst vein, where we hit 17.4 meters at 2.2, including a really good core interval of 5.7 at 5.6. And so we learned a lot in that drilling. We then stepped out to the north and to the west. We've hit the Ankle Creek vein in 4 holes. It's open at depth, it's open along strike. We're waiting on those assays. We didn't hit the Amethyst vein in any other holes, but we need to come back and systematically drill that this year. What excites me about this is you've got 2 veins at different angles that are going to come in and join immediately to the east. And we know that's where you form ore shoots. And so we think having good mineralization, multiple veins, and a huge footprint, this is just the start of Aquila. We might be on the top of another ore shoot.
And when you say poor core recoveries, I mean, it was really bad. Like they managed to get, I think you've said like 15% of the rock out of the ground or something. And
Yeah.
the nature of coarse grain gold is that if you're only taking 15% of the rock, you're probably not getting the gold, right?
We were very worried about that when we went back, and I think that's one of the reasons people hadn't prioritised it. There's little clay zones in with the quartz that you can see why they had that trouble. We were fortunate, the good combination of good drilling and bigger equipment, modern muds, we got excellent core recoveries. And so it looks like we've solved that problem. It might have been a local issue, but yes, they got, I think, as low as 7% in the vein zone, so almost non-representative.
I would say.
And so, yeah, we think we might have the tiger by the tail at Aquila as well. We've just got to systematically drill there, and we're actually going to bring an RC rig back so we can drill a lot of meters quite cheaply and really speed up the testing at Aquila. It's not innovative in a sort of around the world sense, but in Alaska, I think it is quite innovative to bring an RC rig up and do this kind of drilling.
Okay.
Our third target is the old Apollo mine. You can see photos here from it in its heyday. You can see the stamp mill, the train tracks, the old workings. They mined at the surface and the roof fell in. So we've got a really nice zone where we can tell where the workings were. And they produced about 130,000 ounces at 10 grams per tonne. Extremely profitable operation in its day. But they ran into a problem that is a big opportunity for us. And it's shown on this cartoon long section. They mined in the top corner here. You can see where the 130,000 ounces came out of, and they called that free milling gold. That was easy. It was the coarse gold that they just stamped and crushed the rock with the old stamp mills and run cyanide through it and produce gold. But what they didn't understand is what is only a sort of an 80s to 90s development in geological models, is that there's a style of vein called intermediate sulphidation that starts off gold rich at shallow levels, becomes gold, silver base metals, and ultimately just base metals at depth. And so they ran into this sulfide zone, and at the time stamp mills couldn't profitably recover that material. Today with flotation, that's very straightforward, and there's metallurgical reports to support that, as back as far as the 30s actually in this project. But their issue is a huge opportunity for us in that, not knowing that, they kept looking for more of the free milling gold. And they sunk these shafts, shaft 1, shaft 2, and the Sitka shaft, did these exploration drives across and blocked out on 3 sides these veins with sulfide mineralization. They even went one step further and told us it had 3 grams gold, 250 grams silver, and 10% combined lead zinc under the Apollo area. That's 8 to 10 grams gold equivalent today. And would you believe no one followed up from the mine in the 20s and 30s until we drilled last year? We drilled under Apollo with 3 holes. I jokingly refer to this as a cartoon in the 90s from a report in the 50s on a mine in the 20s. So there was always a little bit of wiggle room. And we had to just locate exactly where the vein was and get an understanding of how reliable these were. We can find the shafts at surface, so we could register it laterally pretty well, but you never were quite sure at the depth how accurate it was. And so we drilled 3 holes at Apollo. We hit workings on 1, a second hole deviated, but the third hole we hit 2 veins, and we're waiting on assays from those, but we can confirm that there's a robust vein at depth under Apollo. You can see the old works report, 8 meters, 20 feet wide under Apollo. We also completed 4 holes at Sitka that we're waiting for assays for, and we hit a mixture of stockwork zones, workings, and veins. And so most importantly, we know where the vein is at surface now, we know where it is at depth. We're going to come back and systematically drill Apollo this year, and we think we have another 0.5 to 1 million ounce target that the old timers did all the hard work for, just waiting to be systematically drilled.
That one definitely stands out. I mean, they told you the grade, they told you where it is, they drilled it, and then they walked away from it because they couldn't recover it in ore that, well, I say ore, maybe that's a bit forward thinking, in rock that they couldn't recover, but it would be no problem in terms of recovery today.
Our business is about probabilities, and this definitely turns the odds in our favour. I'll very quickly just touch on Centennial. This time we're over on Popof Island. It's road accessible from Sandpoint. It's a variation on the theme, high-grade veins. This time, instead of forming the gold all in the vein, it's come up and gone into a flat-lying porous unit. Battle Mountain defined 200,000 ounces at 1.3 grams, almost zero strip ratio at surface, great metallurgy from a heap leach setting. But what's really caught our eye is there's some higher grade intercepts like 4.6 meters at 5 grams, and some geophysics suggest that that could be the feeder zone. So we're going to come back probably a little later after the Unga work and look to see if we can expand that zone and find that higher grade material. But yeah, I reinforce that we have a high grade resource that's open, the Aquila discovery that's never been followed up, the old mine we just talked about, and a non-compliant resource. I think if you can find an exploration company with 4 better targets than that, you probably should invest in it.
That was the best way I've ever heard a CEO of telling someone to buy their stock without using the words that you can't use.
I'll take that as a compliment, thank you. And so our plans, you've seen we've put out results in the last few weeks, multiple results from SH-1 zone. We put out the Aquila hole yesterday. We'll have some Apollo-Sitka holes very shortly. And so our plan is, we're champing at the bit to get back and follow up on these. We've clearly demonstrated that the ideas that we've had are working. And so we're going to start with a phase 1 program that's got a core focus on those 3 areas at Unga, using a combination of RC and diamond rigs to get a lot of meters quickly. We have that advantage by starting early in the season, and by doing RC, we can create a lot of samples quickly. We can get them in the lab before we have our competitors putting core into the lab. So it should also improve our turnaround times. That's the advantage that we get in starting as early as we will. Then if we went into an even deeper dive, and for another time, there's a great number of other targets. There's old mine workings to the west at California, to the west of Apollo. There's up to 5 grams gold in a parallel vein to the south of SH-1. There's a really interesting looking porphyry target at Zachary Bay that's got an old hole of 107 meters at 0.4 gold equivalent, never followed up. They are the kind of targets that we're going to work up in the background. And realistically, this property deserves a 20,000 meter program that would cost probably 10 to 12 million Canadian. And so we'll look at those options as a back end, but we can fully fund phase 1. And so we'll start with phase 1 in about a month from now.
There you go. It's exciting to hear someone in Alaska talking about getting drilling in a month. It's very easy to forget that there are lots of projects, as you outlined, up in the north where you don't have to wait until July. March is a real possibility. Okay, I have a bunch of questions that have come in. So let me just start with one that we'll get a corporate sort of question over with first. I think someone saw your slide on share structure and saw Red Star in there and doesn't understand who Red Star is or where that came from. So that takes us back to the corporate wranglings that I referenced earlier. So why don't you just run us through that story?
Yeah, a very good question. So Heliostar formed when the publicly listed company Red Star acquired a private company that I was the CEO of, Heliostar Metals. And so Red Star was the owner of the Unga asset, and I'd founded a private company called Heliostar with a view of starting to build a portfolio, and we acquired some projects in Mexico, which we'll talk about. But we were looking for that flagship gold asset, and we started that search in 2019. Got talking to Jacques Vinecourt at Red Star in April last year, and we realized there was a lot of synergies between the two groups. We could raise money, we understood these kind of systems. We were looking for a flagship asset. Red Star had the asset, they had a share structure that they needed to revitalize. And so by merging the two companies and creating Heliostar, that's how we get this breakdown. So the board and management that owns a fifth, there was 15 high net worth investors behind Heliostar, so another 20% in high net worth hands. We raised $7 million in August last year, giving us a total of 10, and we spent about 4.5 of that in Alaska last year. And then the remaining entity was the residual Red Star shareholders. And so that means we have probably about 50% of our shares freely trading on any given day.
That's exactly the question. Okay, let's talk a little bit about, we'll maybe go through the targets sort of in the order that you went through. So we'll start with SH-1. Someone wanted a little bit more color on what you think the potential is at depth for grade there versus at surface. Obviously, your understanding of the system is still somewhat new. I mean, there's only the information that there is, and you haven't done a lot of deep work yourself. But the frame of the question was that the grades so far maybe aren't quite there for underground drill or underground mining. So anyways, what's your perspective for these sorts of systems going down?
Yeah, it's what you see at the moment is only one of those deeper holes has that grade, and it has it in spades in the deepest hole at 5.5 meters at 24 grams. What we see is, and what we talked about is, there's variability in these systems. There's two kinds of variability. We talked about the coarse grain gold, and that not every hole hits, even though you hit a nice robust vein. And so you just need to drill a higher density of drilling. The other is, we know this is the intermediate sulphidation system that we talked about, and we get a few clues. There's clasts, little fragments of rock that have come from deeper, higher up into the vein as it's explosively formed. You know, you think about geysers at Yellowstone National Park, that's how these veins form. And so we know that there's class of really nice looking base metal material that came from deeper in the system. We also know, based on Apollo, that over 500 vertical meters, you can have that zonation from gold to base metal. So it's a very, very predictable feature of these veins. And so we know as we continue on that the system will be robust and it will transition to base metal rich at depth. And so right now, those deeper results don't support underground mining, but let us drill 10 or 15 holes down there. Let us turn those odds in our favor and then judge that, because we think that there's a lot of potential there, because I don't think we've drilled a vein less than 5 meters width. And so let's drill it to the same density that we've drilled the shallow area. And I think we'll have a very different view of this.
Gotcha. Over at Aquila, the drilling that you've done, the results that you just announced, I mean, that's focused on, you hit 2 veins, and you know, you're very excited about where those come together on their planes, which has potential to be an ore shoot. What's the bigger picture approach there in terms of the fact that you started describing Aquila by talking about how big the footprint is, and so how, like, you reference a lot of veins mapped on surface there. How do you approach this? I mean, you certainly need to follow up on the numbers that you put out yesterday, but what, as somebody else had added to this question with, do you have sort of a resource concept for Aquila the way that you do for SH-1 and Apollo, sort of wraps into the same question. How do you approach the opportunity bigger picture wise?
Yeah, I don't think we have enough drill holes yet to arm wave in terms of those projections that we've made for the other 2 targets. I think there's 2 ways to win at Aquila. The first is, you know, the density of veining might form quite a robust, shallow, open pittable resource. Also, because of the really gold-rich nature of the mineralization, you can see the silver grades, if you went through our presentation, our news release, are extremely low. We think that we're at the very shallowest level of the system. And another thing that commonly happens is these veins coalesce into one main structure. And so target concept 1 is looking for the shallow open pittable resources. Those 1.8, 2 gram numbers over wide intervals will carry that very well. We also think that we could have the classic ore shoot forming at depth. So we'll do a combination of shallow stepping out to see that shallow target, but I think we've also definitely got some deeper targets to test that theory as well, in case it evolves into SH-1 or Apollo, as classically happens in these systems.
I mean, it's kind of, it's tempting to want to ask these questions, right? Well, how many ounces are you going to delineate at Aquila? Because you have reason to at least arm wave those, an answer for that with your other targets where there's been more work and where, you know, you've already had a chance to do more work. This one's just still pretty new.
Absolutely, that's our first hole. You know, admittedly, we had some help from the older work in the 80s to tell us that this was the area. It was on a local grid, and you've got to guess roughly where they were drilling. It's not often you hit 2 robust mineralized veins in the first hole, and you've got, you know, nearly a kilometre total to play with. So we honestly don't know. It could be huge, it could be small, but let's the indications are that this is a big area to explore.
Yeah, it's worth more looking. Okay, you talk about systematically drilling SH-1, Apollo, at least SH-1 and Apollo this year. What kind of, I guess density at SH-1 or number of meters does that actually look like? What does systematic mean to you?
We haven't finalised that until we get all the results back. But what we're discussing, because we're not waiting for all the results before we start the remobilisation, we do have some in-house projections there. You know, we think 50-metre centres is a good start on both of these systems. It's broad enough that you're significantly adding volume with each step out, but not so broad that you're missing the structures of the ore chutes that help you understand. Mm-hmm. Obviously, that's sort of 200 to 400 metre deep holes at SH1. So that probably requires sort of 6,000 to 6,500 metres for our initial plans at SH1, whereas we can drill a lot of shallow holes because it's at surface at Apollo-Sitka. And so we can probably achieve more drill holes with about 4,500 metres to start with at Apollo-Sitka. It all depends. The RC rigs you pay by the day rate, and they do vary on where you drill, on how quickly you can drill, but typically you can probably get twice the meters that you get on a diamond rig. So until we know what that looks like, then we can project exactly what we'll do on each target.
Fair enough. Okay. Someone started his question off with, talk me off the ledge on CapEx and logistics. And I think it's a good start. I mean, obviously it's the key concern here. Mentions how 3 or 4 targets are on Unga Island. How would that impact sort of an operating cost, or, you know, the mineability of whatever you end up defining here?
Yeah, another good question, a question that we spent some time on doing our due diligence before we decided to enter the project. You know, the first part is accessibility is surprisingly good. You see the airstrip there at Sand Point. We either get a half-an-hour boat trip across or a 5-minute helicopter across to Unga. In fact, there was a town on Unga that didn't close down until the 60s when the mine finally shut down. It persisted on, and it lost its post office. It wasn't as good a deep sea port for fishing as Sand Point. So there was a town up until the 60s, a bit further south than Apollo. There's a road network between our veins. So it's not an island in the middle of nowhere, maybe like people are initially thinking. So from that perspective, very easy. From a development perspective, you're at tidewater. So you've literally just got to ship or barge any material, any equipment in. It'll be very straightforward to build the infrastructure. And then there's even the possibility just to direct ship to smelters in Korea and Japan that are quite close. So we think we think developability is actually going to be pretty straightforward with a classic spoke and hub model, as most epithermal vein fields exploit. That's very getting much down the road once we put the resources together. But I don't think there's anything revolutionary about what we're proposing.
Okay, there's been a few questions about, and you touched on it in your last slide, but let's just circle back around for the sake of it, because there's been some questions on, you've got $5.5 million in the bank. You say that's enough for your first phase program. What would your, what's your perspective on what you'd like to do in terms of what you're raising, when you're raising it, things like that?
Good question. I think we debate that as well, and this market's making it very easy to say we'll continue with our core plans. I'll very quickly introduce our Mexican portfolio.
There's been a whole bunch of questions come in. That was going to be my next thing, which is that there's drill results pending from one asset there. There was results announced from Silvercrest nearby that might impact another asset there. So just, you know, in short, just explain everything.
I'll answer both questions, attempt with an introduction to Mexico. So the problem when you have these northern companies is exactly you're exploiting as an investment strategy, is there is a sell over winter mentality. And, you know, having the 9-month field season, the fact that we're putting out results now mitigates that. The other is our portfolio in Mexico. You know, I know Mexico extremely well from my time with Evrim and as the VP of Vizsla. Lucky enough to have been involved in multiple discoveries in this part of the world. And so we acquired 3 projects, Kumara, La Lola, and Oso Negro, that's in the heart of a really growing gold silver district in Sonora. So from a budget perspective, we assigned 600,000 Canadian to drill at La Lola and to do sample mapping and surface work at Oso Negro and Coomera. And if you bear with me, I'll very quickly introduce these. La Lola is a project that I staked when I was the VP of Evrim, so be careful the projects that you fall in love with. It's a 6 by 6 kilometre district with a major vein that locally gets up to 40 metres wide. We sampled it and we got generally low grades, but a couple of samples came with very high grade, up to 58 grams gold, over 400 grams silver. And that was a light bulb moment for us because we weren't expecting high grade because we're shallow in the system, but we now could tick the box that said there is high grade. And so we're drilling deeper to where we think the sweet spot will be. We're starting that program next week. And so we'll have news from that over late March into early April on those results as we test deeper under a very big vein at La Lola. At Oso Negro, we also own that 100%. In fact, we own all our properties 100%. We acquired that because there's 3 veins over 500 meters long that have between 200 and 2.5 kilos, 200 grams and 2.5 kilos silver, and between 1 and 10 grams gold with a few spectacular outliers. Never been drilled. We've actually staked some extra ground because we know of some more veins in the district. We're just one step earlier. We've got to do some detailed mapping and sampling here before we finalise our drill targets at Oso Negro, but spectacular grades that really exciting to follow up on. And then our third property is relevant based on Silvercrest news today. I tried to put together the Picacho district because I like big districts that I think have potential for discovery. And so we own the Coomera claim in yellow there, 100%, but we were comprehensively outbid by Silvercrest for the rest of the district last year. You know, they're a public company with tens and tens of millions of dollars, and we're a small private co. And so the upside is that we have a key part of this district. And so today, Silvercrest announced, I think 42 drill holes. The best is 7 meters at 40 grams gold. They average, I think they drilled 21 holes and got an average vein width of 4 meters at 8 grams gold. That is in this area up here called Picacho. It's a project in 2 halves because to the west there's outcropping veins. They trend onto our ground and have never been drilled on our ground. Yamana drilled them to the boundary. And then on the east side of this green fault, it's a down-thrown block. And these coloured pixels represent clay intensity. And so we think that it's down-thrown and we're preserved at a shallow level. And so we're doing our mapping and sampling here to work out what's the logical next best steps, because I think this district has a lot of potential as Silvercrest is demonstrating. So to close back to answer the budget question, we're spending $600,000 on this program. It'll give us news results from sort of March to April after we've completed all the Unga results from 2020. Then we'll pivot back to Unga with the $4 million program that's fully budgeted, and we'll get news flow from Unga in sort of May onwards, maybe a bit earlier, April, May onwards. And so that gives us A, consistent news flow, but B also means that we don't need any additional funding for the remainder of the 2020 holes, the Mexican drilling, and the first part of the Unga drilling this year. So we're in quite a strong position in that sense.
That was a lot of questions answered in one fell swoop, and makes sense. And everyone always wants to know when financings will happen. And it's basically, you know, nobody has a crystal ball, and you want to, it's always a balancing act, and you have enough money to do a lot of work as you've just laid out. And so it's not pressing upon you to put a pin in when you're going to finance, let alone what price that's going to be at. So hopefully some of this news flow plays into that decision in a positive way, right?
Absolutely.
Yeah. Well, we've been online for an hour, everyone, and we've had a bunch of very good questions. I think this has been helpful to me. I learned a few new things, even though I thought I knew the projects pretty well. So thank you, everyone, for tuning in. We certainly appreciate your interest and your time. If you have any questions for me or for Charles, we are very easy to get a hold of. You can do it through this webinar platform or on either the Heliostar and Resource Maven websites. We are easy to find contact information for. So thanks, Charles, for coming on and joining me here today. And thank you, everyone, for your time, and enjoy the rest of your Wednesday.